Welcome to the AlphaMind podcast, the podcast which focuses on the person doing the trading, their interaction with the market, the impact the market has on them, and the skills, actions, and activities needed to navigate their way through the terrain and complexity of the markets. I am Stephen Goldstein, and my co-host is Mark Randall. Today's topic is about sources of edge in trading. Before we start, we would like to thank our podcast sponsor, the Society of Technical Analysts, the STA. The STA have been providing world-beating education on price action analysis techniques for over 5 decades and have been the go-to place for professional traders and investors to learn high-level technical analysis skills. The AlphaMind podcast is delighted to announce that listeners can obtain a discount on their outstanding home study course and their home study course with a diploma, which is based off their diploma programs taught annually at the world-renowned London School of Economics. Go to alpha-mind.net to find out more about this offer. Now, on with the podcast.
So, Steve, absolutely fascinating topic today. We're just, you and me, just wrestling with this whole concept of edge. And it's not as straightforward as it seems, as we know from the various coaching and discussions we've had with many people. And, of course, some of the subjects that have been covered across the podcast itself. So let's go start with me sort of posing to you. So what is edge to Steve Goldstein? What does it mean to you?
Yeah, well, I mean, it's a fascinating concept, and it's something that, think of it like, the cut of an incredibly sharp sword. It's what slices through the challenge. It's what defeats the enemy. But it's not just the sword, it's the shield as well. It's the person who is fighting that enemy. They have to both attack and defend. And then it's the person themselves who is doing that, who's engaging in that battle. And it's not just what's happening in the battle, it's the preparation around it. It's the managing of themselves through it. It's so many other elements. It's awareness of the environment that you're in. It's being observant of what's around you at all times, and it's being observant about how you are. And when I've worked with traders over many years, and as a trader myself, there is this focus on the system, the analysis, the strategy, as if that's the magic pill. And that is often the sword that you're holding, but there's so much more to it. And it's a fascinating concept that, as I've progressed through this work as a coach over the past 10 to 12 years, it's become so central to so many of the conversations I have with people. What is your edge, I ask them. And often people will kind of focus on, well, it's the approach I use, it's the system I use, it's the method I use. And I say, well, what's unique about your method? How is that your edge? And then often they'll find, well, it's one of the edges, and to me, it's the edge that puts you in a place to win. Mm-hmm. But it doesn't necessarily bring the wins itself. Mm-hmm. Actually, we have a negative edge as well. So we have a positive side to us, a positive edge, and a negative edge, which is, when our ego comes into play, when our emotions take control of us, it creates a negative edge and it dulls the edge that our system has. And I go back to a conversation I had on an interview, which I carried out for the STA actually, with Jack Schwager a couple of years ago. And we were talking about this concept, and I asked him this question. And he made it clear that, the system or the approach you use is just one edge, but it's not the edge that defines it. And he made a point of talking about the trading turtles. He said, look, these, and if the reader isn't familiar, I'm sure most, or the listener isn't familiar with that, the trading turtles was an experiment carried out in the mid-1980s by two well-known traders at the time, I think it was Richard Dennis and Bill Eckhart, who had a bet on whether they could sort of grow traders like turtles are grown in a turtle farm. They were visiting a turtle farm that they'd invested in Asia at the time. And they had a bet with each other whether they could do it. And if you've ever seen the brilliant 1980s Eddie Murphy film Trading Places, it was that was the concept behind the film. And the idea behind the trading turtles was that they were going to select traders. They advertised for traders, I think, in the New York Times, and they had thousands of applications, and they selected a small group, I think of 20 or 30, interviewed got it down to a small core group, interviewed them, and they then basically brought into this experiment the ones that they thought were the ones most likely to succeed. And then they taught them the system which Richard Dennis had been using himself for many years to trade the markets and had been incredibly successful as. So they taught them it and they gave them it, and they were all trading the same markets. They were using the capital given to them to trade. They were having their risk managed externally by Dennis. So in effect, they were using the same system, which meant they should have all performed roughly the same. But the results were vastly different, with some of them being very successful and some of them being very unsuccessful. And then some just kind of some mediocre performance in between. And in fact, they were, some of them left the experiment and some new ones were brought in. And this kept happening. So it kind of shows that it's not just the system or approach you use. There are so many other factors.
So I got a problem with that sort of story, really, because the story suggests that those turtles sort of were matured in the same environment to suddenly be put into this sort of game to trade. But the reality is that we've all been, we're the consequence of our own individual histories and our learnings and our trading, and none of us are the same. And so we need to understand that as the basic principle when we look at these models. We talk about, you talked about the three edges, and reality is there's probably an infinite number of edges, but there are some elements of those of that range of edge that are reasonable considerers to be considerate and important for trading. And I think if you start to look at the aspect of the battle of the trade, the one thing that I think we've noticed throughout our journey and storylines with our guests and our own experiences is that, well, the future is always right for a start, and we position ourselves to trade into this sort of future. But those of us that don't have any comfort with uncertainty are likely to be those of us that will probably foul. And so for me, one of the critical things as to how we look at those edges is having a realistic expectation that we're not going to be winning all the time. And, we're going to be, losing a lot of time, and it's how we respond to those losses and uncertainty that is really, really important. But also we kind of kick ourselves in this world of trading. It's just how we calibrate and measure ourselves as to understand, well, what does success mean? It's all well and good having an edge, but what's the ambition of having that edge? Is it because you want to make a load of money? Is it because you, like Tom Canfield has changed from that recent podcast, is slightly changing his objective to be, it's not about money, it's about time. And actually, what is more valuable to us, or limited time frame of being on planet Earth? Actually, time is probably the most valuable thing. So if you're getting involved in this environment that is trading and you're kind of working out your edge, it's about your balance of understanding, well, okay, well, what is a reasonable objective for me to be making in the markets as a sum? What are my expectations as to what to expect on the journey that I'm going to have to cope with? And actually, am I smart enough to be able to cope with coping? Because we know that most people are not set up to cope well with failure at all. failure as terms of bottom line, but more importantly, the failure on the impact on their personal structure and what it means to them. And so, from my perspective, the edge is sort of deeper than the model that's been suggested. When it starts to get down, it starts to get into sort of the DNA, the trader DNA of you, but also having the right mindset to understand that DNA is not actually fixed. That actually that DNA can be tweaked and refined and to be made smarter, faster. I'm kind of like sounding like the $6 million man sort of intro. We can build him faster, smarter, and whatever. But I think we have all that capability to learn and to tweak ourselves into something far more powerful, but also far more realistic about what we're trying to achieve. And that's about mindset, growth mindset, as we all know. But I think having this attitude as we look at these edges and look at the environment, the attitude is, what will the unfolding future teach me, is a really, really important point that most traders don't pay attention to.
Yeah, well, I think, as I'm sort of processing what the message you're saying there is, I'm thinking that, I spot that there are kind of three real main sources of edge. And I think what you're talking is about yourself here, how you are, how you engage with this process of trading, which as most people go through this, they find, that they have these huge expectations that they're going to do really well, make lots of money, and, soon they'll be trading under a palm tree on a beach somewhere. The kind of dream that's sold to them, and then the bullshit which follows through.
Well, I'll just add to that point I made there. It's the forgotten edge from a trading perspective. But if you go into the sports world where performance uses a very similar model, it's not the forgotten edge. So we need to change the narrative in the trading world to actually reinforce the importance of this edge.
Trading is a performance activity, much like sport.
And realize that.
One thing that I've noticed over the years, when I work with outstanding traders from all fields, is that they have a higher purpose. It's not, if it's about money, and it usually starts off about money. Money is the attractor, but it changes, and that purpose, they have to have a purpose that's beyond that.
Absolutely.
And that purpose sort of unifies them and sets them in a direction that it gives them the resilience to survive, but it also sort of creates these multiple edges. So if many of the best traders I work with, they tell you it's not about the money. The money matters, of course, but it moves beyond that, and as I say, when I work with great traders, what is it? Well, for a lot of people, it's to provide for my family for the future. It's to give me independence and freedom. It's to change the direction and course of history of my life. It's, I just love this job, they say. I'm fascinated by it. I want to learn how to do it well. It is something that I want to do every single day. Yep, it's a huge challenge, which is what I love about it as well. That's what people say to me. When I ask people what motivates them to do this, what drives to do this, when we go down that list, when they give me a little list, money comes a long way down that list. And when you really get into it, I heard an interview with the legend that was Stanley Druckenmiller last year, who said, do you know what, I love this job. It's kind of, I would be, people could, I would pay to do it. That's how good it is. Obviously I wouldn't, he said, but I just love it that much. And that's what, when you love something about that much, when you're passionate that much about it, it gets you to find a way through. It becomes an edge in itself, and you find a way to navigate it. Now, you talked about, back there as, having an edge and managing yourself. For me, there are three key edges, okay, that you need to work on and develop and cultivate. The number one is that system edge. The edge gets you in a position to succeed. You need to have that. You need to have a system, an approach, a strategy, a method, a way of finding value in the markets. And that's what people spend 99.9% of their time focusing on, as if that is going to give them the rewards. And that's a mistake. You don't need to spend that much time on it, because if you do, you're crowding out everything else. You're not developing the other stuff. Okay, that is the sword. If we use that analogy, if I love to use comparison to blackjack. The casino game. You're turning up at the table. The odds are against you. The odds are in the house's favor. So how do you twist those odds back towards you? You have a system. You have to have a system. You can card count, okay? And you've got to develop that, and that's a skill and it's time. But that twists the odds back towards 50-50, okay? And that's what a system does in trading. It will not give you the answers alone. It will not make you win alone. There's got to be something else. Okay. So the second edge is risk process. Now, I meet some incredible traders. They're working in funds, they're working in prop desks, they're working in energy and commodity trading firms and banks, and they're also retailers. They're professional retailers or, very dedicated retail traders. Retail traders. And
that's their sideline.
Yeah.
They're corner shop traders.
It is for some of them. And even then, their risk process isn't strong enough. The reason why, they've got a good edge in terms of their system and method, but they are not strong enough on their risk process. They don't have their sizing anything close to optimal. They don't have a playbook that's developed enough that they can adhere to and trust and back.
So do you think they've got that far so far because of just luck? They've just,
there's many reasons.
I look at these things by they've just had a lucky pathway to become successful, rather than
luck is a part of this. If I go into my story, I was a trader for about 13 years, well, nearly 25 years, but the first half of my career, I think I was a little bit lucky. I worked in a bank, which is lucky. Okay. I worked with many great traders who subconsciously mentored me. So I was lucky like that. I was lucky to have people around me who supported me. As I say, it's a lot harder to do this on your own than in a trading room and within other people.
And I think that's interesting, actually, that point about it's the willingness to be supported as well if the support is there.
Yeah.
So I think it suggests to me that you had a growth mindset of accepting learning on your journey. So you almost created your own luck, to be honest.
But you also have people that you bounce off. This is the importance. And I think we had Mike Bellafiore talking about this a couple of podcasts.
Very interesting. Yeah, absolutely.
How if we're in, when you're in a bank, when you're in a prop room, when you're in a large trading room, you are in the middle of the market. You are swimming in the water of the market, and you, in that position, you feel it. Okay, you can read the tape through what you feel. So I've got another lucky edge there that allowed me to get through those first 12 or 13 years. Okay, and
it does require an attitude from you to accept that, though, because there are a lot of people that would push back on some of that and would just say, "I'm all right. I've got nothing more to learn. I've got a good model, and I stay siloed." Now, a lot of people like that, as we know in trading rooms, that that don't want to listen to the junior because they think, well, what does he know? But as Mike Bellafiore said, bringing together a junior and a senior actually made their trading better in his business in New York.
Yeah.
So I think a lot of it is around attitude, because you can have the wrong attitude and fail and get kicked out.
There is an element. We all have elements to us that make us stronger in a situation and make us vulnerable as well. And I was no different. So you've got to obviously unconsciously navigate that path. And I suppose, I adapted myself to a degree where I was able to survive that journey. There's luck, you know, survivorship bias, whatever happens, that got me to where I was. But I kind of reached a point in my career where a mixture of, you know, some really good years and some pretty mediocre years, and I wasn't moving forward. I was probably sliding backwards in my career. And then I was lucky to be put into a coaching program. You know, I called that the greatest luck I had. I just so happened that a senior manager wanted to experiment with this coach, an executive coach, who he'd had executive coaching from. And he wanted to bring him in to work with the traders. And I was there, lucky that I was on his desk and I was selected to be that. And I rejected it at first, but he twisted my arm. And that was the best thing that ever happened to me, because
you accepted the need for it, yeah.
I didn't accept the need for it. Actually, I pushed back. You know,
well, you said initially,
the trader's ego came out. We all have it.
But then you accept it. Then your mindset shifted and actually, this will be good for me.
And he showed me who I was.
Yeah.
He allowed me to see myself, and I realised,
revealed yourself. Yeah,
I got to change. There's a part of me here. And, you know, if I'm honest, I was very good at finding value in the markets. I had that edge. Maybe that edge had got me so far at that point. Okay, that's what I was talking about, some sort of, you know, call it your finding value edge, FVE is the term I use.
Yeah.
Okay, but you must be able to monetize that. And that's the second edge, that's the risk process. And my risk process was weak. Probably good enough to get me to that point. Probably because I had these edges on my side of being kind of in the sales side, within a team, within people, having supporters, you know.
Interesting. So in a big bank, you still had very weak risk process. And I think it's a lot of people in retail will think, well, don't big banks just teach risk process well? Well, I think I don't think you do, right? Sit down there and make money.
And risk process is as much that it's both the sword and the shield. It's the ability to be able to execute and manage that risk optimally. Okay, so I was weak on that. And then I think, you know, about myself, which is the third edge. So we called it RPE edge, edge number 2, risk process. The third edge is you. It's who you are. It's that, you know, that soup of strengths and weaknesses, of vulnerabilities and edges that you have, mental edges. You know, so I had certain edges. I was very persistent. I always have been. I was very, you know, I looked at everything like a puzzle, which is a great way of looking at markets. It's a puzzle to solve, you know. So I've got this kind of detective nature where I dig and try and find these
curiosity, absolutely,
favorable risk reward setups. So that there's parts of me who I was, but also I was nervous. I was fearful. You know, I was very anxious, and I wouldn't always back up my ideas, or I would go in like a bit of a, you know, a pussy. Maybe not a very politically correct phrase these days. So that there was, you know, and I had to work on that. And so I had to develop those parts of myself. And there were lots of other elements, you know, and they all combine. This is why I could talk about, you know, the multiplier effect of these edges. So if you have a finding value edge and you have a risk process edge, there's this final edge, which is your self edge. And that edge can be, to me, it's somewhere between 0 and 1. And if it's 0, it doesn't matter how strong the other ones are. If you multiply it by 0, it's 0. So you can have the best system going. You can even have a good risk process. But if you are at a negative mental edge, if you're kind of on a tilt state, you're not going to monetize those edges. It's not going to come beyond just luck.
No, I see. I'm sort of visualizing now this sort of, it's if they get big enough and important enough in your strategy, these edges as they evolve, they start to intersect and cross at the middle.
Yes,
and you get this,
it's like 3 circles overlapping.
Yeah, you get this sweet spot.
Yeah,
and your market advantage, your trader advantage, is having that overlap and having that sweet spot developed.
And the stronger that overlap,
and kept there, because actually reality is that those bubbles that represent, you know, these worlds of edges not static. That something, if you let yourself off the guard, one will start shrinking, so you're starting to lose your edge.
Yeah.
Right? And one actually could get too big that it takes too much control.
Well, you know what it's like when you're on tilt. You can have every trader sitting out there going, I recognise those moments. Okay, I've got a great idea. My read in the market is right. I'm going to choose my size, but you're not. Your mind's not there. You're on tilt. Maybe you're anxious. You're fearful. You're just not at your best. You've suffered a loss in recent days, so you're not. You're or even tilt can be the other way around, where you're overconfident. You're not seeing it clearly. People always think tilt is when you're in a negative state. Tilt is when you're overconfident as well. If you've had a really good run, how often do you give money back at that point? Damn often.
Yeah, it will never get any easier. I mean, but the market won't become easier, but you can become smarter. Yeah, so but that requires work. Anyone at the peak of their performance, sport, military, trading, whatever, works on it. They work on these things constantly.
Absolutely.
And they're the things that, in terms of developing edge, you need to have that mindset, growth mindset, particularly, that I need to continue to tweak these bubbles so that they are absolutely optimal, so that they're overlapping and my trader advantage stays my advantage, because it is very easy that I can lose that advantage. And that awareness of knowing that my bubbles have gone off in these different directions now, I need to have a holiday. I need to step away. And also this point that it's about understanding failure, understanding uncertainty and all of that, but there's also understanding that every now and then you could be infected with the disease of me.
I
won because I'm talented. I will therefore keep winning.
Yeah, let's come back to that in a second, because I just want to talk about very quickly our podcast sponsor. Let's give them a shout out. We'll come back to the podcast shortly. But just a quick reminder that the AlphaMind podcast is sponsored by the Society of Technical Analysts, the STA. And the STA have been providing world-beating education on price action techniques for over 5 decades. And we're delighted to say that listeners to the AlphaMind podcast can obtain a discount on their outstanding technical analysis home study course. And this is based off their diploma program, which is taught annually at the London School of Economics. And you can do the home study course, or you could do the home study course and the diploma program. Okay. And this is really useful, by the way, if you're looking to get into the industry, into say a hedge fund or an investment bank, or even to develop your own system and quantitative skills. So if you want to find out about that, visit alpha-mind.net. There's details about how to see that offer from us. So do look that up. Now I'm going to go back to the podcast. Thank you.
Well, I'm actually going to say that is part of your edge. So if you're looking to develop edge, then golden source education, right? Learning from the best in class, getting experience of joining these communities, of listening to what others are going through. That's part of how you're building your edge. So great.
And learning is part of your edge. And actually, there are so many different elements. I mean, they don't teach trading, and I make it clear to people they teach analysis. And analysis isn't trading; it's an important part of trading. Your system is not trading; it gives you the point, it gives you that edge, it tilts the edge in your favor overall. But you still need to manage yourself. And you were talking about ego just now. Now, that's why the greatest traders I know, they're usually so humble, or if they're not naturally humble, they've made a point of working on their ego and not allowing it to interfere with their trading. And that is so powerful.
Yeah, I mean, it's so true. There's a lot of people that have this sort of sense of entitlement, that, I'm so great at what I'm doing. Flaws are intolerable, but they have this sort of, when you get to that state, you just it's just impossible to self-correct.
I think we're all a bit like that.
We're all, you're quite right. So every now and then we turn into people that we perhaps would never like to be friends with. So,
what? You talked about our DNA. You talked about our DNA earlier on.
Well, yeah,
I often
it's
talk about our human operating system. That's how
same thing.
we're made. We're made, you know, the ego, and it's quite a difficult thing to define. You know, it's you know, I don't think there's anyone yet who's settled on a singular definition of ego. But it's, you know, one of the things I heard recently, I was doing this course about trauma. It's an element of the protector. There's a protector element about ego. We're trying to protect our self-esteem. We're trying to protect. It comes in to protect who we are, to stop us going off track. So as humans, we're social beings. You know, in the ancient environments, you know, the last few thousand years, we lived in small groups. Okay, we relied on those groups. We weren't capable of surviving on our own. We looked on those groups for defense, for security, for hunting, for food, for support. That's who we are. And without that, if we were ejected from a group, kicked out, that was it. That was a death sentence. You know, at some point, our demise was going to be, you know, hurried unless we found a new group to belong to. So the ego is almost part of, you know, making sure that we don't do things that cause us to be ejected from a group. Don't do stupid things.
But we will do
to be humiliated. Don't allow us to be ashamed. So it's always adjusting our behavior to make you feel, you know, protect your self-esteem within that group.
But it's also the fact that we will do stupid things, and it's knowing you've done a stupid thing and then getting yourself back to planet normal pretty quickly. Because if you carry on doing stupid things in your trading, and
the ego is the
become a habit.
You think about a stupid thing as being wrong. We hate being wrong.
Yeah.
Okay. We hate losing. We hate failing. Trading is something where you are wrong often. You know, you are going to lose, and if you can't accept that, you're in the wrong job.
Yeah, I mean, losses are twice as painful as wins.
Yes. Yes.
Right. So you're going to have to bear in mind the fact that no matter how much you win, if it's a 50-50 bet, well, it's not anyway, but, you know, we can talk about that all day. You know, if you've not got a plan to deal with these losses, you know, the negative and neural inflammation impact of that load of negativity can put you off even a string of wins. You know, you might win, but you'll still play back into maybe God, but yesterday didn't I drop so much money, and, you know, and you still haven't got over it. But you could have won more if you'd got over it.
Let's stay with that bit. So imagine that you've got a system that it wins 50% of the time, it loses 50% of the time. But when it wins twice as much as it loses. So it's a lovely system, right? That is going to win every time. You should take every single trade in it. Okay. But 50% of the time, you're going to feel twice as bad
exactly
when you win.
And net,
it's going to turn bad. You've got this natural bias working against you. Now, mood is really significant in trading. When we're in a positive mood, a good mood, we can see past problems. We're more open to new ideas. We're more creative. We're more able to survive the volatility of the market. So let's just say you put a trade on, it moves against you. If you can look at it objectively and you think, well, it hasn't hit my stop yet, or it's, you know, you can allow the trade to breathe, to come through. If you're in a negative mood, you're fearful, you're panicking, and you do things, you go off plan. And then that's where things go wrong. You may cut a trade short. You may pull a stop. You may add more when you shouldn't be. Now you're going off process. Process is everything. Okay. So that negative mood from that negative feeling of a loss starts to affect your trading, your process, your actions, what you're doing. And that's the edge. The edge is the ability to remain objective, to let go of the bad outcomes, to sort of, you know, that's why risk process is so important. The second edge, you know, to adhere to process.
A wise fella in the early days of my career, when actually we were trading and learning the ropes of the very early days of the futures market, before it came live in London, we were given these portfolios to trade in Chicago just to get a sense as to what this is about. you know, and you job around a little bit. You know, you think you're up, you think you're down. And this very wise sort of, you know, global head of the time of this markets business said, look, you need to calibrate wins and losses, okay? Because actually, you've got a string of losses here, and you're getting uptight that you've lost, but you've lost like teeny amounts of money. But when you've had this win, it you know, you've won like 10 ticks, but these losses are like, you know, 1 or 2 ticks, and so you've managed those, and that's fine. So actually, you've done really, really well, and you've done well, but actually, you're not looking at that. So you need to calibrate wins and losses. We're talking about a win and a loss, but actually, if you start to look at what you're doing in the markets, there are some things that are so close to zero. You know, you may have been stopped out really, really soon after trade, but you know, you dropped a couple of ticks and you got it down as a loss. But actually, it's a relatively neutral. It's a neutral trade, really. You know, okay. If you've suddenly been stopped out on a big loss and you've not managed to stop effectively, and you've got carried away, you've doubled up the wrong way round, and you've got, you know, you're taken to the cleaners. Yeah, that's a loss. Then you need to understand, well, what went wrong? You know, what part of my decision process went totally wrong to make that loss, and understand that, and learn from that, and, you know, then change what you're doing to move on from that. But I think we get too sensitive at times. So winning and losing is sort of almost so binary. But in reality, there's a finer sort of story there. But actually, if you step away from the stuff that's, yeah, you'd lose a tick. I wouldn't put that down as a loss, quite frankly.
But that is part of this kind of third edge, your self edge.
Absolutely.
Ability to act optimally, you know, and to be present. I mean, if you can be present when you're trading, you're more likely to see things with detachment. Yeah. You're more likely to see things objectively, and then it's easier to put them into their place and let them go. But often, you know, the market kind of draws us in, and we become incredibly attached to what we're doing there, sometimes too attached, and then our ego unconsciously comes out, and that's when we become fearful. That's when we become unsettled easily, and that's where we become owned. So that self edge is about learning to own who you are when you're trading, to be present, and to stay on top of it. And you know, there's a lot of different elements there. You know, I mean, sometimes too much time spent at the screens. You kind of forget who you are.
Well, you lose your mental ability of screen staring will just throughout the day just get lower and lower and lower and lower and lower, unless you're doing something about that.
Yeah. You know, many years ago, during a period of my life, I was playing online poker, and it was just a bit of fun. It wasn't anything serious, but I would open 2 or 3 screens on my PCs at a time, because, you know, if you've ever played it, one screen is quite boring. You need a little bit of action to keep going. And then as I played more and more over the, you know, half an hour, I found myself switching off because I was getting a bit bored because the games were going slowly. So I'd open a 4th screen, and then a 5th screen, and then a 6th screen. And all the time my capital was going up, you know, it was going well. But then as I opened too many screens, met too many hours at the screen, my attention span was going down. You know, my energy levels were fading, and it required me to do more and more observation. I would then miss something, you know, and at that point you start to lose objectivity. Oh, stupid, what was I doing? What was I thinking? And then your mood goes down, and you start to see things. You become a little bit fearful. So you start to move towards tilt state. Yeah. May not be fully on tilt. And I always remembered that my curve, my profit curve would start heading down, and then it would get pretty much back to zero after a few hours. And I'm like, and I noticed this pattern all the time, you know, and it's like, well, if I just
you did nothing about it, or
yeah, I stopped playing. It's like, this is
stupid.
I'm enjoying this, but I'm not getting anywhere with it. I'm just wasting my time.
Yeah, you get the casino effect. Yeah, I'm at the machine. I'm putting the, you know,
I recognised that in my trading, you know, from periods where I was very active day trading. I'd recognise that I'd trade really well in the morning. I'd follow my plan. I'd adhere to my rules. I'd stick to. And then in the afternoon, I'd just see my, you know, I would get wrapped up in these. There might be 3 or 4 trades on my blotter in the morning, and there might be 20 or 30 in the afternoon. And you know, I was doing really well in the morning, so I recognised that same pattern. So I had a negative edge. As I went through the day, my attention span goes, my ability to exercise self-control goes, my biases come out, and it you know, is an awful lot of work to just about stay ahead. And that's not going to be true for everyone. You know, one of the things I did then was I traded less in the afternoon. In fact, I went to more longer term trading. Even though I enjoyed the short term trading, as I got older in my life, it was like, and I'm doing an awful lot of energy wasting, and I'm missing some of the bigger picture opportunities because I'm caught in the kind of minutiae of in and out day trading. So
of course, the bigger opportunity is to get on with life, because as we said at the beginning, that you know there's an awful lot of people that we go stare and stare and stare and stare with the frustration of getting nowhere or making minimal.
Who listening here or watching here doesn't recognise that when they're just sitting inanely at the screen, kind of almost as if they're willing the prices to change their way,
hoping that
you know, hoping. That's a kind of classic
strategy.
Yourself edge where it's nil. Once you're into a hope strategy, and again, self-awareness. You know, we talked about that earlier on.
Yeah.
The more self-aware you are, the more you can see yourself. And again, you know, we talked about ego earlier on, right? I've commented that there are a few exceptional individuals that I've coached or worked with over the years, and they almost have this ability to see themselves trading. Okay, it's a superpower beyond superpowers for traders.
To see themselves as through the eyes of a third person watching themselves trade.
Yeah. If you've ever sat on a trading desk with other traders,
that's from my whole background. That's super important. If you can do that, and observe as a third party, what you end up doing is that you cut through a lot of the emotion. So it doesn't feel like your emotion. You're watching the pain of maybe somebody else that is this. You're watching you, but you're not suffering that same pain because you're observing the whole process. So you can make a better decision. You're calmer. You're more responsive. You're not. The market doesn't own you. You kind of own your trajectory through the market by seeing yourself through this slightly different lens of an observer of you performing. That's a superpower. That's a superpower.
Absolutely. It's for you to own everything. The more you can own everything you do, the better you will be. And that takes courage. You know, courage is the antidote to fear. Okay. How often do we trade because we fear missing out? What about if we have the courage to miss out? And that is powerful.
That's a trade. Not trading is a trade. To step away is a trade.
You know, someone said to me once that the art of trading is the ability to watch the market and not do something.
Yeah, absolutely. And have joy in the process of defeat if you do jump into it and lose your trousers, skirt, or whatever.
Absolutely. Listen, I'm very mindful that we should start wrapping up this episode.
Yes, that was great. Good to, as people will know, once you get us two together, we just can't stop because 70 years of all sorts of experience comes out and gives these great perspectives, which we hope the audience have got some takeaways there. There's some big things that have been talked about in that little chat that we know very many people are not talking about.
Well,
we want to bring those to the attention.
And I think I just wanted to sort of, before we wrap it up, just revisit this idea of there being 3 main sources of edge. And you know, for a trader, the sexy one is finding value. You know, it's analyzing the market, finding opportunities, and then taking the trade. That to a trader is sexy. What is not sexy is the risk process. You know, working on your sizing, working on your money management and your risk management, building your playbook, having a filter that before you take a trade kind of filters them out. Does that one align with my playbook? Does that align with my personality? Does that align with the environment of the market at the moment and the context that I'm trading within? You know, that those are not, you know, that's where journaling is really powerful. So you can, I'm a huge fan of journaling and building up a record of what you're doing, what you're thinking, what you're feeling, and then observing it and looking back over it and reviewing it, and not making a judgment on whether a trade was a good idea or bad idea just because whether it worked or not, but was it part of a good process? So that risk process edge, people don't work on that, and it's massive. You know, there's no point having the ability to find value if you don't have a process that allows you to monetize that value. And if you put all your effort in finding value, in analyzing the market, and virtually no effort on that other vital edge, okay, you're going to have one edge that's got a value of one edge that's got a value of half, and straight away you've minimized the value of that first edge. And then there's the extra edge, the self edge, your self edge, the third one. And again, you know, for me, that has a value of, you know, if you're on tilt, 0, if you're on in flow, 1, and then various levels in between. And the closer you can be to 1, that multiplier allows the multiplier effect allows the other 2 edges to really come through as a metaphor. So again, there's a third thing you have to work on. You have to work on yourself. And again, journaling is a fantastic tool. Learning about yourself, spending time developing yourself, developing your mind, developing how you manage yourself, you know, trying to be conscious of who you are and how you are when you're trading, you know, and you know, we talked about that episode a few weeks ago, weaponizing the mind, you know, developing that. Really, the mind is to me, it's not just in the brain, it's your whole body, and it's weaponizing who you are to really
weaponize your system. Absolutely.
Yeah. So
excellent. Well, yeah, I think it's very, very clear. The the message is it's hard work. You got to work on it. You know, but if you want to perform in anything, you've got to work on it. If you want to be the winner in whatever you do, you've got to work on it. And you've got to constantly work on it, but give yourself some downtime, get yourself re-energized. You know, don't take negative baggage to bed with you so you don't sleep. All those primal things that are important, you need to think about those as well, because you know, it's a bigger story than just those 3 edges we've spoken about so far. So there's lots of things that need to be right for you to be an
performance activity, isn't it? It's a performance. Athletes, they sleep well, they eat well, they nutrition well.
Yeah.
They work on getting into a positive mindset.
Yeah.
You know, that affects their performance. It's a key ingredient on the big day.
Yeah, and they still might lose.
There's then
what they do about it. Yeah.
They review it.
Yeah.
They look back over it. They analyze it.
And they're coached, of course.
Yeah, of course they are.
And they're coached, of course. So, you know, coaching is relevant in this space as well. So, you know, we have our own programs that can be super helpful for people and businesses.
Absolutely. So let's just maybe to wrap up, you know, to the, you know, everyone listening or watching today, we do hope you enjoyed this episode. Also, we highly recommend checking out our recent episodes, and you can look back on whichever service you use to run through that. Make sure you do subscribe. We'd be delighted if you could leave a nice rating and a friendly review on whichever podcast service you use, and also be sure to subscribe so as not to miss future episodes. Thank you to our podcast sponsor, the Society of Technical Analysts. And just a reminder, you can check out how to obtain a discount on their outstanding technical analysis home study course at our website, alpha-mind.net. Thank you for listening. The AlphaMind podcast is co-hosted by the two of us. My great friend there and colleague, Mark Randall, who's been in markets almost since day one. And myself, Stephen Goldstein. And together we are the AlphaMind Project. You can learn more about us and our services, our trader coaching, executive coaching for managers and leaders within the industry, our performance development services, which we offer to professional trading businesses and individuals in both the professional and retail trading space. You can learn all about that on our website, alpha-mind.net. So thank you for joining us today.